Hey guys, it's Andy from Magooinvesting. Today I'm going to be talking about one of the most commonly used phrases relating to stock market and investing, and that is buy low, sell high. And just kind of thinking about this, it makes a lot of sense. You want to buy lower than you're selling it, you're going to be making a profit. And so if that's how every trade worked, that'd be great. It'd be super simple. Everyone would be really good at it. But as you can expect, that's not how things work. And today I'm going to be talking about some of the downfalls with that phrase, and then at the end of the video, I'm going to be making a suggestion to change that to make it more realistic to how you should be trading. The general idea of buy low and sell high makes a lot of sense. You're going to be profitable, things will be going great, but that's not how the stock market works at all. My main problem with it is the total lack of directions. What does buy low, sell high mean? The buying part makes a lot of sense. You want to buy it when it's cheap and it's undervalued. But what does high mean? Does it mean that if I buy Apple at $200 today and tomorrow there's good news and now it's up to 210, do I sell it because it's higher or do I wait for it to keep going? Just the total lack of directions doesn't really explain what you should be doing during your trade and just kind of shows the end or the beginning and the end result and doesn't talk about anything in between. And so while it's a good problem to have that your stock increases in price and you don't know if you should sell it or hold on to it, the more likely scenario is that you buy a company, it falls, and then do you sell it right then? Do you wait a couple months for it to recover in price and get higher? Or does it never recover and it goes bankrupt and now you just lost all your money? And so buy low, sell high does not address that at all. All right, so I've kind of explained some of the downfalls with the phrase. Now let's talk about how we can fix it. So my biggest tip for new investors is to always go into a trade with a plan. If you don't have a plan, you're just kind of hoping for things to go well. And a lot of the times it does not. So having a company that increases in price and letting it run up, you see your profit, and deciding when to sell is one of the easiest or most enjoyable problems to have in the stock market. But when you're in the red and you can see that you're losing money and the effort it takes to click on that red button to say sell and know that you're going to be losing money is the hard part. And with that being said, now I'm going to show a quick clip from The Wolf of Wall Street, and it's kind of one of those movies that's become a meme about investing, but there's a clip in there and one of my favorite quotes about investing, and we're going to talk about it after.
I never ask my clients to judge me on my winners. I ask them to judge me on my losers because I have so few.
Besides the very end of the quote about having so few of them, this is a really good quote when talking about investing. I would love to have a lot of losers as long as they're small losers. And so judge me on my losers and not my winners, because anyone can hold a company and let it increase in price and sell, but it takes a lot of discipline to sell a stock that's not going the way you thought it would and to take a small loss instead of having your whole count go down the drain. Hell, in the past week, even I had to sell a stock for a 1% loss. Did the trade go the way I thought it would? No, I thought it was going to be a pretty easy trade. But when the news about the market came out, I realized that the pattern that I was trading was going to disappear really quickly and it wasn't my fault, so I sold it for 1% loss instead of if I wait until now where it's down 10%. So I minimized my loss, I accepted that I was going to take a loss, and I got out before things got worse. If you remember from my Tesla video where I was talking after the earnings what I was going to be doing during that trade, I talked about the upside where I thought it could go up to 300, but then I talked about having strict rules for when I was going to sell if things went poorly. And so the rule I had was that if a full candle closed below the support that I was playing at 230, I was going to sell. And so that happened, and you know what I did? I sold. I broke even, but I was up 10% before that. I thought it could go higher, and I didn't sell. It fell, and then I had my stop in place, and I sold because it broke the pattern I was playing. And so I missed out on 10% profit, but now it's down a further or more than 10% since then, so I kind of broke in the middle. And so you don't want to be judged on your winners because winners are easy. Having losers that are just kind of small losses. You don't want to be having 10, 15% losses. You can survive with 1% losses as long as your winners are more often or they're larger than that. And so having a 1% winner, not that hard. Having a 1% loser happens all the time. So as long as your winners bigger than your losers, you're going to be doing pretty well. And so overall, I would change the phrase to buy low, sell high, unless your pattern breaks. And that's not as fun to put on a t-shirt, but I think that's the better advice to be giving to new stock traders instead of just buy low, don't tell you what to do in between, and then, oh, now you're in the profit, yeah, you should sell, but not tell you how far in the profit or anything like that. The moral of the story, go in there with a plan, trade the plan, and if things don't go well, you got to sell earlier rather than later. So let me know if there's a topic you'd like me to go over in the future. Just let me know in the comment section down below, and I will see you guys in the next video. Thanks for watching.